Hi there, guys. Welcome back to the EdgebyRS Academy. Today, I'm going to talk about an exclusive insight. Typically, I reserve these for my members over at Discord. But heck, we've had a strong start to the year. 7 months, we've done phenomenal, and I believe in the gift of giving. And you folks who watch my recordings religiously will know that each time I have come up, I have given you not only something for your journal, something you can learn and use it for the rest of your life if you're serious, but I've also given you opportunities to make some money. Now, look at this chart right here, and the focus is on two elements here. The first is 7522. Now, those of you who have been following my weekly plan on Substack, who follow my tweets on X, or those of you even in my Discord, will know that 7522 is the top of a custom balance that I have been following. So the bottom of that balance sits at roughly about 73.54, and the top of the balance is at 75.22. Now, why did I pick 75.22? That's for another day. And even if you want to learn, you must be in my Discord. But apart from that, observe right here, I have circled in black and purple. Black circles indicate a gap down of 75.22, and purple is a gap up. So bear with me here, and I'm going to walk you through this. This is your previous contract. Now, again, this chart is a continuous chart, so which means what we are observing on 5th June is actually an ESM contract. And look here, we had a value gap down that led to the break of 75.22. Now, every gap that you observe on this chart has gone on to achieve something. There was always a magnet on the other side of this line that ES or market participants wanted to rotate into. So the first one right here was a breakdown. Now this breakdown, what was the magnet back then? If you guys recall, 72.86, 73.05 was that gap up, which was left open for quite a few weeks. And that is precisely what was the primary target. We overshot a bit, but that's besides the point. The point is markets eventually use this gap down to achieve that magnet. Let's move on. Ignore the pink box that I've drawn. That's the contract rollover. Let's get back to it. This is your FOMC day last month, 17th June. Look what happens on Tuesday. You have a gap down. Now think about it. What did this gap down had to achieve back then? If you guys recall, upon contract rollover, and if you read my weekly plan, I had said 74.38, which was the ESM settlement, would be the magnet. And precisely that's what happened. We had a contract rollover range retracement due, and that's what we got. ESU went on to retrace majority of the ESM range. That is where you had the ESM settlement cleanup at 74.38, and thereafter we went all the way down pretty close to my balance bottom at 73.54, and that is where you had the contract rollover nuance, which was achieved. Thereafter, look again, we have another gap up. Now this time, what was the magnet for the gap up? The magnet was the poor high of Thursday, 2nd July at 75.94.3. Again, every gap up or gap down had a clear magnet. Thereafter, look at this, gap down. What does this gap down achieve? The poor low that we left behind on 2nd of July. And look, in the same process of cleaning up this poor low, ES left behind another poor low at 74.70, which meant at some point we would come back. But before which, another gap up. Now this gap up is the one on July 9th, which filled in the same session. Nevertheless, was a gap up, opened on a gap, and went on to rally above what was the then weekly high. And this rally was in anticipation of the CPI. Thereafter, observe CPI, PPI. Both are events, and those of you who follow me again, you know I have a very standard approach to events. If events fail to accelerate a trend, reversal follows next. And see, right here, we had FOMC that failed to accelerate, then CPI, then PPI, and most recently, Google. Again, nuances which are very, very important for you to understand. Again, we have another gap down, and this time it was led by Google earnings. And what does this gap down want to achieve, guys? Same story, 74.70. But this time, there was an additional nuance to this. And what was that nuance? That this excess low failed on 3 and 4 attempts to sustain new highs. And what that ultimately led to? A question mark over these buyers of 29th June. And look what ES then did thereafter. Gap down, cleaned up the core low, and went all the way down back to the excess low where you had some underlying or pent-up demand. So what I'm getting down to is 75.22, an important level, circa, of course, on another day it could be 75.27, right? But the point is this level remains important, and each time we gap across this line, there are magnets towards which this eventually rotates. So think about it. If we were to get back above 75.22, and that could be on a gap, on a value gap, it could be on single prints, IB breakout, we need to observe these things. But the moment that happens, you want to think about the value gap that remains open at 75.78. Point number one. Point number two. In the event 75.22 remains open, or even if it fills the gap but remains below this line, you want to start thinking, is the value gap at 73.45, which was left open from Friday 12th June, become the next target? And that's where you are going to use 75.22, the nuance around it, to help you target the next at least 30 to 50 points. Okay, so that's it from me. I hope this was helpful. And these are just subtle nuances we observe amongst many others. And yeah, I wish you guys a good weekend, and I'll see you live on Monday.